afternoon. This is the market update for buy sell short for Tuesday, October 29th. We're going to start off with the Dow 15-minute chart just simply because we're not going to talk about it much. There's not really much information we can glean for it. Just an absolutely massive rally we've seen over the last 20 days. We are up 900 points now with no retrace to be seen, and this 15-minute chart really isn't helping us much. We were slowly moving up the last couple of days and slowly moving up today. A lot of sluggishness out there. A lot of the spec money really got chased off to the sidelines over the last 3-4 days, but we saw that start to come in. Probably the light was news from IBM this morning, and the market really took off after that and just continued to build throughout the session. We actually saw a nice little bit of momentum in a couple of sectors, which was nice to see, especially after the really crappy kind of trading action we've seen over the last couple of days. We're going to look at the daily chart, though. Dow daily chart right below double top breakout. Phenomenal run that we have seen here. You recall the chart we went over this weekend regarding the ascending triangle that has set up on the Dow daily chart with a 15,700 area breakout leading to possibly a 1,200 point up move over the next couple of months. Very, very strong. One of my favorite chart indicators. Going to be interesting. Tomorrow is the second day of the Fed meeting. The Fed is meeting today. Tomorrow we get the announcement. The Fed is not going to change anything, but the market is really going to pay attention to what language there is and try to read something into it and either jam the market down or jam the market up. It's going to be one or the other. It's just been typical for the last few Fed meetings. Now, Fed's on hold now until Yellen takes over. So, let's see what happens tomorrow. I'm inclined to believe that we might see a dip first before the breakout, but, anything really is possible. What tends to happen on ascending triangles like this is we can see a dip when it gets to that breakout level, kind of a shakeout dip. You've got, the bull or the bear saying, no chance you're going to break it. It retraces and then explodes to the upside. We also have some ammunition for this setup to actually work, and that is the 1995 chart, which we have used as our roadmap throughout this year. And you can see this is the period we are in right now on the 1995 chart. And you can see in 1995, there was a lot of back and forth. Then towards the end of the month, the market started to rally. It was up about 5% into the last week of October. And then in November, it rocketed higher by, what was that? It was a 400-point move, which back then was about a 7-8% move in the course of 4 weeks. So let's see if we have a similar thing set up for us again going into this year. Dow Transport's looking a little bit tired. RSI is the most oversold. We have seen it in several months. Volume has not really expanded. We've got ADX in the nosebleed area. We've got stochastics in the nosebleed. So we're going to be paying really close attention to the transports over the next day or two to tell us if we're going to see a dip or if the dip that everyone is expecting is not going to happen and everyone's just going to have to rush through the door and buy stocks. Russell is forming a little bit of another rectangle formation here, trading at all-time highs. This one has not hit the 70-plus level on RSI, so it could have a little bit of an up move. But, we've got the 20-day exponential back here at 1,100. And actually, if we look at the Dow Transports, it has been 3 weeks now since we touched the 20-day exponential, and that is typically about as long as we see without the Dow Transports pulling back to its 20-day exponential. So, let's see what happens. Let's see what the Fed meeting brings tomorrow. Meat. Nice little flag set up. Got that break of 220 last week. Treaded water for the last couple of days, and then today went boom on big-time volume. Very, very nice breakout. And, of course, we still have the real gem plays lagging. Locum, though, finally we got that breakout thanks to that move in meat. Locum, $95 million in revenue. Profitable. Market cap is $40 million. So they've got a market cap half the size of meat with double the revenues plus of meat. And it's trading substantially cheaper than what meat is. But we finally got that break of the triangle today. First target is 220 plus here. RSI has been very, very strong. We got to bounce off the uptrend on the stochastic. So we saw volume come in as well today. We want to see volume continue again tomorrow. 210 would be the next break, and then off to the races we go, baby. INUV. This is another woefully undervalued advertising play that's trading at a market cap half that of meat, and they're profitable. Earnings report is tomorrow. I had that article I wrote suggesting that if all things come to pass, these guys could post $200,000 to $500,000 in EPS tomorrow. Earnings are after hours. I am planning on holding a position into earnings. So let's see. If they disappoint, we could be seeing the 50-day moving average. If they beat to the upside like I think they do, the stock should start to move and be valued where it should be, up in the 3 to 4 plus zone. App. We have not been doing a whole lot over the last couple of days, but App was one of our plays yesterday. We liked the chart setup. It was finally, it had been curling and ready to break the downtrend. It did that yesterday. We jumped in 123 to 125. Up here, 140 to 150 zone was our target, and boom, it went today. Traded as high as 145. You got to love it when you get a 20 cent, 18 cent gain in really an hour's market time, rock and roll time. See what happens if it is able to continue tomorrow. It might find some resistance around that 150 level, or it could dip back down under the 50-day, which would make for a great pickup. These retail stocks are really starting to pick up steam. This is their time of the year, so it's not a surprise that these stocks are starting to wake up. Now, when this one broke out, we, of course, jumped into Joe's. Joe's Jeans reported earnings 2 weeks ago. Stock dropped 20%. They posted $970,000 in operating income. They are profitable. They actually posted a headline loss, but the reason for that was they spent $1.3 million on their buyout of Hudson Bay. One-time buyout. You always see the big giants like Amazon and all these other stocks, but Wall Street ignores these one-time items. But on small caps, they do not. But that stupidity is our advantage. And given the move that we've seen on App, a break through 110 will bring the chasers, and we should see at least a move back up to that 120 area. Chart looks nice. Stochastics oversold. MACD ready to turn. RSI ready to turn. Should be rock and roll on a 110 break tomorrow. Quick mention on CTIC. Rule of 2 play. Coiling there under 2. We have until the close tomorrow for this one to bust out. They report earnings after hours tomorrow. This is not a stock I would like to hold into earnings, so we're going to give it a few more hours, see what happens. Probably our luck will be that they'll have some sort of monster news on the earnings reports and it will break out. But as a rule of thumb on a stock like this, we've given it a couple of days. We're going to give it a few more hours and see what happens tomorrow. So that's it for the video. We've got some very, very nice setups going in tomorrow. Fed day tomorrow. We might be, a little bit quiet, but once we get through this Fed meeting and the market decides if it's going to pull back or ignore everyone who wants a pullback and just rush to more new highs, we'll get that answered in the next couple of days. So have a great night, guys. See you in the chat room tomorrow. Bye.